This is Jim Emter, Van Ahn & Company, Alexandria, Minnesota, with the closing grain and livestock comments for September 28th, 2016. Corn market down 2 to 3 cents, soybeans down 6 to 7 cents. Wheat market for Chicago and Kansas City anywhere from down 1 to up 1. Minneapolis up 5 cents. When you look to the grain tone today, we continue to deal with these big yields. We've got a nice open window over the next 5 days in weather, allowing for some very active harvest. But then we have some rains coming in the 6 to 10 and 8 to 14 day forecast, and that's going to keep the market a bit on edge. We also had some very good private sales this morning, over 1.5 million metric tons for corn. Beans had 2 private sales totaling nearly 300,000 metric tons. And at the end of the day, we just couldn't put the rally strength together because of these positive yields and great crop outlook. Another key component here is South America. In the 6-day model here, on the 6th day, we're looking at some very good precipitation for Brazil, and that's going to bring optimism to planting. So a real tug of war right now, more of a range-bound market from the grain sector. We're looking for that area right around 315, 320 as key support. Upside counts 350 seems pretty optimistic right now to get to even that level. In the soybean complex, 915 to 930, kind of the downside key counts here, and upside counts right around 970, 980 as targets for marketing. So looking at the feeder cattle market, up anywhere from 35 cents to $1.45. Live cattle down 35 on the front, up 50 in the back. Hog market steady to up 25 cents. And when you looked at the cattle markets, it was a big day in cattle back and forth, but at the end of the day, more around that steady type tone seemed to be the outcome. We'll see tomorrow if we can get some better cash trade, and that could bring better prices together, but really need that cash to come together as our export market is dismal right now. The hog market, just a lack of bull news. As you read through the news, you almost get more bearish even at $46 here. So a little bit concerning in hogs right now in the near term. Not a lot of reason to really excel to the top side. So more of a sideways pattern in the near term. Another big feature here for producers, if you're needing some farm fuel, trying to get ahead of OPEC here. OPEC talking that in November, they got a proposal with the cartel to actually reduce production, and that's bringing some optimism to the energy sectors. This has been Jim Emter, Van Ahn & Company, Alexandria, Minnesota. Trading in futures and options involves risk of loss and is not suitable for all producers. Past performance is not indicative of future results. This is a solicitation.